please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Ashwani and Mitesh with us for some BTST calls. Ashwani, a bit of a recovery in the market. Your thoughts and your BTST calls?
See, one thing is clear that the market does not believe all these guys. So hardly three sectors are positive. Why is the rest of the market lower? So I think still a bit of panic and frenzied buying and selling is visible. So don't let your guard off. A lot can happen over the weekend. So maybe it's a better idea to come back on Monday. And today's range is fairly wide. So chances are Monday we could trade within today's range. So now it should be back to playing the lows and the highs. I don't think the trend can be played because a pullback would be 300 points on Bank Nifty. So maybe that volatility needs to cool off. Having said that, Kotak Mahindra Bank has broken its 200-day moving average today. That's down 5%. So that's a sell with a stop of 1180, target of 1120. Colgate Palmolive is a sell with a stop of 1100, target of 1060. And Container Corporation is a buy with a stop of 630, target of 665.
Okay, Ashwani, that's an interesting way of summing it all up in one line, right? Market isn't believing any of them. That's Ashwani's take on all the clarifications that we've heard today. Okay, let's go to Mitesh. Mitesh, just quickly, BTST ideas or STBT?
I have two sell calls. So, Siemens is a sell with a stop at 940 for targets of 875, and Bharti is a conditional sell. It needs to break the support of 364. In fact, it was trading just right there a few minutes back. So if it breaks 364, sell with a stop at 368. Look for a 352, 350 kind of a target.
All right, let's do one thing now. Let's invite our alpha manager for the day. Anand Shah, Deputy CEO and Head of Investments of BNP Paribas Mutual Fund, is with us. Anand, hi, good afternoon. First of all, apologies. We had to address that breaking news that we had at that point in time. So sorry, we had to keep you waiting for a bit. Your thoughts on the kind of move that we've seen? Is it irrational panic playing out right now in the market?
Hi, very good afternoon. I think again the move, as you can see, is quite diverse. Even not only last 1 to 2 weeks, but even from the beginning of the year, while the Nifty is looking up, we have been seeing correction in the mid cap and the small cap segment. So overall, the mood of the market has sort of changed, and we are very clearly seeing that people, given the macro uncertainty that exists locally and globally, people are a little more cautious than they were before in calendar year 2017. So I think this is a similar mood, except that the name of the stocks have changed, and a very recent sharp rupee depreciation is just added a little bit more in terms of volatility.
Anand, now the same question. Is this the time that you go in and buy these NBFCs, whether it's housing finance companies or some of the consumer finance names, or would you wait a while?
So I think there are 2-3 aspects. One is obviously if you have an ALM mismatch, which means you actually have sort of borrowed short and lent long, then obviously it will have an impact on the margins and so on the valuations also. Secondly, have you been sort of growing too rapidly, and would a rising interest rates can lead to sort of a more default of a cycle, and would you have more NPAs? So that's another question you may ask. And third is, at what valuation the NBFC has been trading, and what sort of growth is priced in, because at the higher interest rates you will also see some slowdown in the retail loans where the growth has been very stupendous. So I think I don't have one answer, but we have to look at each NBFC and say, look, whether the valuations have priced in a certain growth, whether they'll be able to achieve it, whether the Treasury has done the ALM management good enough that they will be able to pass on, their ability to pass on the rising. So the cost will increase has been not new. It's been going around for almost last 6 months, NBFCs were sort of under pressure in terms as far as equity markets is concerned, because we were looking at, their cost escalating and they might not have as much of a pricing power. So, there are multiple questions to be answered before we, look down and say, look, so we do have a particular NBFCs in our portfolios, and we do have certain NBFCs which we don't like fairly because of the growth expectation and the valuations at which they are trading.
Okay. Anand, the other big problem for this market has been the aggressive selling, not just in NBFCs, but even the bluest of blue chips. I mean, Kotak, for example, has fallen 15%, HDFC Bank has fallen so much, and a lot of these stocks, FI-driven stocks, have seen aggressive delivery selling. What do you think it is? It doesn't look like just a normal correction, because normal corrections in these stocks don't last beyond 5-6% and beyond, say, a month or so. This time it's been rather protracted.
So I think, again, there are two parts to it. One, they've been doing extremely well in the past from the fundamental perspective also. The loan growth has been great. Margins were expanding. Fee income was great. And given that the fundamentals were great and the earnings growth rate was good, people also sort of re-rated them. What I would believe has sort of changed in the last 1 month. So again, I'm repeating, what you're talking about of the bluest of the blue chips have been sort of outperforming market significantly. There has been sort of correction in the market already since the last 6 to 7 months in the mid caps and the small caps, which is a reflection of rising interest rate and others. Now coming back to the bluest of the blue chips, I think what a rupee depreciation would do is the very segment, which is the retail consumption segment, on the back of which you had a sharp loan growth or a sharp consumption growth in the consumer companies or in the auto companies where the passenger vehicle growth rate was extremely good. We believe some sort of a rise in the interest rate, a rise in the auto fuel prices will sort of trickle down to slow down the growth rate. So what now we are facing as a headwind to these companies are that they're trading at a very high valuations with a very high growth expectation, whereas that the same growth expectation might not be valid at least for a couple of months, 2 to 3 months, given that we have a headwind of rising auto fuel prices, pinching the consumer at the margin, and the rising interest cost both.
So, Anand, very quickly, I mean, as this plays out, what would you like to add in your portfolios, and where does consumer fit in? Because not only have financials taken it on the chin in this correction, even consumer stocks like Lever, or I mean, even Titan for that matter, Maruti, if you consider that a consumer play, all of them are down 7, 8, 10%.
Yes, indeed, I think it's an as I said, this is the issue for next 3 to 5 months, and this will also pass through. There is a general inflation which the consumer can absorb over a year, though it would come a little rapidly for this point. So to that extent, we always like the companies with a very strong franchise, those who have a consumer ownership. They will indefinitely bounce back in terms of growth and in terms of profitability growth rate also. And the only problem in this market for last few months have been that, yes, these companies are great, they have a great consumer franchise, they will benefit from rural consumption and the urban consumption picking up, but the valuations were very high. Now you're reaching a point where, because of a temporary slowdown expected, it's not yet slowdown, because you talk to these consumer companies, they are not facing any slowdown yet. But nevertheless, even if you assume that with a lag, this impact of a higher fuel price and a higher interest rate will lead to some consumer slowdown, but that would be, again, I believe, would be temporary. We are getting a correction which was much needed in these companies. So I don't think that this is not usual. This is normal. In cycles, these have happened in the past. We should look at the consumer companies with a strong franchise, or even the financials which have a good consumer ownership, the retail banks and the retail NBFCs. And I think at a right price and at a right time, they should be accumulated by the investors.
All right, Anand, we'll leave it on that note for this afternoon. Thank you very much for joining in. One of those afternoons that won't be forgotten that easily. Anuj, I don't know, we're looking at the screen. From the top, we're down, what, 5.5%, and then there comes a day like today, and it suddenly, shakes up people's sort of nerves altogether. What's your takeaway after this roller coaster?
that's just a point here, Surabhi. People have portfolio, people have positions, bulls, bears, everyone, and everyone according to that has their view. You should listen to what the market is telling you. The tape is telling you that there's a bit of an issue here. Today's low is now sacrosanct because you've gone there twice, and today we have had a bit of a panic factor. 1 month back, we had peak greed. Today, you had peak fear and peak panic. Normally, that's the time when, even if some news comes in later, the market may have tried to price that in. So that's why I think today's low now becomes a sacrosanct number. If the market correction has to extend, in that case, you will see today's low being broken, because now there's a 200-point cushion between today's low and the price at which we are closing. But obviously, there's a bit of a problem with the NBFC pack, and it's not just, I refuse to believe it's just 260 or 300 crores of selling in commercial paper, and that's led to a 45% decline, and that can't lead to 10,000 crore market cap loss. So obviously, there's a bit of an issue here, and that's something that you have to take cognizance of. Of course, the other big problem today for the market was that the large stocks continue to see selling. Yes Bank, of course, was down 29%. Bajaj Finance was down 4%. Kotak, HDFC Bank, IndusInd Bank, these are the kind of names where you continue to see selling. Though today, HDFC Bank did see some bit of buying towards the end. That stock actually ended in the green. But Kotak was down, Axis was down, so that's a bit of a problem. What else? On the way up, oil marketing companies were up. TCS, ITC. So there was some buying as well in some individual names. And once again, if you're taking, a look at the overall Nifty components, 20 Nifty stocks in the green, 30 Nifty stocks in the red. It's just that the selling ferocity was just a bit too much in large stocks, and that led to this decline on the Nifty, down about 100 points.
Well, that was the Nifty, and on the mid-cap side, we were all over the place today. The index has lost 469 points. Obviously, it's much better than the 3.5% decline that we had at around 12:30 this afternoon. But anyway, let me recap what the weakest links have been. No prizes for guessing this one. DHFL, despite all the clarifications, stock is still down 45% in a single trading session. Can you believe that? The other big losers included the likes of Central Bank of India, 20% declines over there. By the way, Indiabulls real estate is down about 15% as well. Of course, ADAG, Reliance Communications, Reliance Infra, these stocks are down 10 to 11%. HCC has lost quite a bit of ground. Adani is down about 10%. On sugar, a lot of the hope trade that was building up, that got undone today. So Bajaj Hindustan, Dwarikesh, Dhampur, etc. Most of the stocks on the way down. The other group company, HDIL, by the way, since we're talking about today being such a big day for DHFL, HDIL was down about 10% as well. So plenty of weak names. The list is long. Walkhard, Vijaya Bank, count in something like a Torrent Power, REC. Of course, NBFCs across the board. So the likes of LIC Housing Finance. Look at what's happened to a Canfin Homes, a PNB Housing Finance, and Ujjivan. I'm talking about cuts between 5 to 7, 8%, depending on which stock you're looking at. Even some of the names like Aditya Birla Capital, for that matter, were under pressure today. On the upside, however, there were bargain hunters. They weren't very loud. They perhaps weren't too visible. But look at Page Industries, for that matter. So there's bargain buying that's also happened today. Page is up about 4%. There's some buying on Oil India, buying on Concor. Dilip Buildcon found some takers today, 3.5% over there. And Interglobe was very interesting. On a day like today, towards the last hour of trade, we had some action on Interglobe Aviation, which was up about 3.5%. Just Dial, some of these other names also were in the green. But I guess, Anuj, I don't know what's the takeaway. I guess we'll still enter next week on a slightly fragile note.
I think on these days, these kind of days, sort of Page Industries stock always does well. That's another issue. I don't know if you can call it bargain buying, because, it's among the most expensive stocks. But, it's obviously the market's way of saying right now, if you're looking at the Nifty, the Bank Nifty, financials have a bit of a problem, Let's not ignore that. The Bank Nifty today broke the 200-day moving average. Normally, the first test of 200-day moving average should be defended. That's not been the case. So let's see. 25,600 is what we have. Let's take final thoughts from our guests. Ashwani, what would be your verdict? And Monday, of course, what would be your first instinct in terms of trading?
See, if you see the Bank Nifty chart since demonetization, There have been, I think, four corrections. This is the fourth one.
Sorry, Ashwani, we've lost your link. We've lost your video, so we'll need to thank you on that note. Mitesh will thank you as well on that note. Prakash Diwan is with us. Prakash, good afternoon. Apologies, we are coming so late to you, but your thoughts on the way this whole DHFL issue played out today?
So let me make it quick and fast because I'm sure markets are now shut, so it really doesn't matter. The fact that we had a very quickly conducted con call by the management, represented by fairly decent level of senior management there, and still the stock didn't see that kind of a takeoff or turn of mindset, tells you that there's a wave of selling that is still waiting to happen. I don't think there's anything fundamentally wrong with just DHFL, that it's been kind of made to be the scapegoat for this entire liquidity issue that is hitting the market. By the way, a week back, Edelweiss also raised some money at about close to 11% yield. So that went away unreported of sorts. So I think there is an issue with NBFCs getting overvalued, and there's this whole correction that's structurally expected, and it's become very vicious. So my sense is that panic and fear combination is kind of adding up to the high valuation stage, and that's exactly why you don't find takers in this. So next week would probably be a continuation of this capitulation, maybe slightly milder, and it's you remember it's expiry week also, Anuj, so there will be some ramifications of that adjustment. But I think we are in for some tough times in terms of a reset of the valuation game. And then probably October could be a altogether new look at how things are.
Okay. Prakash, good afternoon. And again, apologies. I mean, it's been that kind of a roller coaster day. But, I just want to extend that point. What we saw today, you mentioned that Edelweiss has been doing its own selling as well. Mutual funds will do what they need to do in order to build sufficient cash to prepare for an event. And the event being IL&FS. And we all hope we don't go down to that brink. Yeah. But the manner in which this extrapolated in the equity market, with a stock being hammered 50%, something doesn't quite add up over there, right? And I mean, mutual funds have been doing the selling, as DSP told us. They have been building up cash, doing some selling over the course of the last several days. Today was not an exceptional day.
That's right. Yeah. No, so I think it's just being exaggerated because of the kind of vulnerability of the market. So be the texture of the market. The moment we opened today morning, when Yes Bank was down some, humongous 30%, 40%, whatever, these are situations which don't happen every now and then. I mean, this was a historic day where a bank with such a huge market capitalization sees this kind of capitulation just because of a little bit of an uncertainty, eventually post-January in the leadership. Now, if it's an institutional setup, if it's a bank which is governed by so many covenants and so many principles, why would it, have such an issue in terms of losing 40% of its value? So there is an overreaction because people are expecting the market to be weak. And when you find the reason, when you find the trigger, everybody starts unanimously looking at it as the done thing. And that's what happened. And 3 hours later, you had DHFL getting hammered by that. And I don't see a reason, if there was a DHFL issue, specific issue, why would a Cholamandalam Finance be hammered? Why would a India Bulls Housing also want to go through that? 24%, capital adequacy ratio, and you still believe, this could upset things by 20% of the company's value in a single hour. So I think it's overreaction, and these things do happen when the market is overstretched in terms of its valuation. And I like what Mr. Hemendra Kothari said when you were talking to him, that these are excesses. First it was on the way up, now it's on the way down. So, the market will have to probably find its equilibrium sometime, and hopefully next week is the time. And it's a decent, favorable set of levels that we probably start seeing in the market.
Final question then before you get set for a much-needed weekend break, I think. Prakash, what did you buy today? If you can't tell us that, tell us what you plan to buy as this continues.
No, I was liking the fact that you were discussing Page Industries, and while it doesn't come cheap, flight to safety and flight to quality is something that you always have to keep on reminding yourself. Look at a Biocon, look at a Syngene. There was some very positive news flow around these stocks, but they just got ignored and eclipsed. So this is what you need to look at, and always somebody else's weakness is somebody else's strength. So you had the OMCs doing well, and so I think the market will keep on giving those opportunities. So always keep your shopping list ready. Don't just put a date on it. You never know when you are going to get for a bargain deal, but there's enough to buy in the market, and I'm sure next week we'll have more to add to that list as well.
Welcome back. Well, in an exclusive interview, Amit Chandra of Bain Capital tells CNBC TV18 that rupee is not a worry for the private equity players and that their long-term returns are intact, and adds that Bain needs to take a decision on the exit from Himadri Specialty Chemicals. Take a look.
The Indian rupee's depreciation has broadly been in line with the pound, the Aussie dollar. In fact, we've done better. We've outperformed relative to those two currencies. Broadly, we've been in line with the Chinese currency. So we've actually not had a bad run. The dollar has definitely strengthened, but relative to other places that we invest in, we've not had a bad run. Certainly what has happened is that in a short period of time, because of combination of oil prices and trade wars, I think the dollar has suddenly appreciated. But I would not hesitate to add that none of that has really taken us by surprise. When we invest in India, we always add a rupee risk premium.
Yes.
And so that gives us the comfort that over long periods of time, there will be some depreciation in the rupee. And as long as you factor that in, there's enough returns to be made over long periods of time.
Core areas are financial services, IT, BPO, industrials, and you have consumption as well as TMT also.
And healthcare, I would say.
And healthcare.
Yes.
So which is the area which is taking up most of your time?
I would say all those areas. We are spending a lot of time on healthcare because, it has, it has gone out of favor a little bit.
Yes.
And financials are beginning to look attractive again, as are industrials.
Is Himadri Chemicals also gearing up for an exit then?
Himadri Chemicals is in fact doing excellently at this point of time, as you would have. They've had a record quarter just recently, but yes, it's in its 7th year, now, and at some point of time we'll have to decide what we want to do with it.
Is market volatility a dampener for taking these decisions right now?
You see, as a responsible shareholder, we always think very hard about what's the right time to take our decisions. And, obviously, when you see a lot of volatility, you take a call on what's the right time to press the button for any investment.
Okay, that's the word coming in from Bain Capital, but it's time now to slip into a short break. When we come back, Manisha Gupta will join us to tell us what is happening in the world of crude and commodities and currency, given the fact we have seen a 1% move in crude today.
Welcome back, and what a day it has been for equities, currencies and commodities as well. But one thing you can't ignore is that this is a week that's headed on a very positive note for the commodity space. So whether it's crude, it's precious metals or base metals, all seem to be headed for a stronger week. Nick Parsons is head of strategy and research at Thomson Loydie, and he joins us on the line. Nick, hi, thank you so much for joining us. What is your sense? I mean, the weakness in US dollar, of course, has been a part and parcel of support. On the other side, it has been the US-China trade war, which the markets really seem to be factoring in right now. How have you read the global cues and the reaction on metals this week?
Well, good afternoon from London. I think by far the most important factor for the gold price has been the US dollar. There's a very, very close link. If we go back to August, the absolute high of the dollar this year came on the 14th of August, and the absolute low of gold came on the 16th of August. So it was barely 48 hours. So the weakness in the dollar is the key driver of the improved sentiment in commodities more generally and gold in particular. And then when we look at the gold price, from the middle of April, we've actually fallen 15%. So it's a very, very large decline in the price. Investors have moved out of it. If we look at the amount of gold holdings that's backing exchange-traded funds, gold in ETFs is the lowest it's been for more than a year. So no one's got the position. Investors are not exposed to gold. The dollar is turning, and everything is ripe for further continuation of the gold price in a positive sense.
What's your sense, Nick? Where are we looking at the gold prices heading now? Because what's happening in the global markets has led to some buying, short covering in gold. Are you looking at much more gains?
I think there is potential for further gains. Let's have a look at the technical situation, for example. We're here at 1207. Which is already the best part of $40 off the low. But today, for the first time since April, we've broken above the 50-day moving average. And we've not seen that for the last 5 months. Now, the 100-day average is at 1244, and the 200-day average is at 1284. Now, I think that's a bit of a stretch, to be honest, getting to 1284. But having broken the 50-day, then the target to watch for is 1244, which is the 100-day moving average there. And if we go back to that very, very close relationship between gold and the dollar, then you would say for the gold price to get back to 1244, we would only need around another 1% off the DXY index. So the DXY has come from 97 down to 94. If the DXY were to fall to 93, then if you look at the correlation that's held so far this year, 93 on the DXY would be signaling around 1240 on the gold price.
Fair point, Nick. We'll let you go at that. Really appreciate you taking time out for us. So as Nick is mentioning, in the global markets, it really is the US dollar. And as he mentioned, 100 days moving average for gold at 1244 is a level to watch out for. With that, a very short break. Up next, we will have Ranisha Chanani to give us some strategies on the same. Welcome back. Ranisha now joins us with her update, or rather strategies on the commodity space. Ranisha, hi. It has been quite a week, but starting on with the crude oil prices, where Sunday is an important meeting in Algeria between OPEC and the allies. What are your expectations?
Hi Manisha, I think this week has been a positive one after so many weeks of negativity in commodities. Finally, the sentiment has turned from risk off to risk on, and we have seen some buying coming in an entire commodity space this week. So even this week, we have seen that crude oil has been trading around its resistance, $70 for WTI and $80 for Brent, and 5,100 rupees at MCX prices have been trading around this range. I think this meeting of OPEC and its allies would be a non-event kind of thing, because we won't see any type of new announcements that could come in, because we have already seen so many announcements coming in from Saudi Arabia that they are comfortable at these prices. So I think prices would continue to inch higher and higher. And even for today, I think 5,100 is a level where buying could be initiated. I'm expecting targets like 5,150 in the intraday by the evening session.
To ask you on what are you picking up on the metal space, because almost everything is up 1 to 3%.
Yes, we have seen entire base metal has picked up, and as I said, the sentiment has changed because of dollar weakness, and gradually we have seen that technically prices have been trading above their technical resistance, be it copper, zinc, nickel, everything is trading above its resistance level, and they have given good breakouts. So I think from here, still more upside can be seen in zinc, where I recommend to buy around 177 for the targets of 180. Even nickel and copper also seems to be heading higher, 1 or 2% in the evening session. So entire base metal pack still looks good.
All right, so not such a great day on equities, but definitely all buys coming in on commodities from Ranisha there. Thank you so much for joining us with your strategies. With that, it's a wrap up on this edition of Closing Bell. Thank you for watching.